2022 has been a very tough year for the global economy, with some major shocks hitting it. We think in 2023, the world economy will continue to be dealing with the aftershock of these impacts, these major events. Three things worth watching for in 2023. First of all is European gas demand. So unless Russian pipeline gas returns, Europe is going to have to live with lower gas demand, not just this winter, but next year as well. The key question is where that lower demand comes from. Is it from the power sector? Is it from households? Or is it from industry? And that will mean a lot for Europe's industrial base. The second thing to look out for is the US labour market. So despite the Fed hiking rates very aggressively this year by 375 basis points already, the US labour market has proved very resilient and it continues to add jobs at quite a high rate. So we'll be looking very carefully at metrics such as job openings, such as the quit rate, to look for that loosening in the labour market that the Fed is going to want to see before they're willing to pause their tightening cycle. And finally, COVID in China. The government has shown a willingness now that they want to move away from their zero COVID policy, which has been very damaging to growth. However, that's going to require some kind of strategy, probably in terms of vaccination policy and revaccinating people, reaching parts of the population who haven't yet been vaccinated. So we'll be looking very carefully at vaccination data in China as another metric. So there are certainly major risks to the world economy heading into 2023, but we do see some silver linings as well. Some of the data has started to suggest we may be at a turning point now for inflation, with producer price indices data looking a bit softer, some of the survey data as well on costs placed by companies looking less inflationary. And that's a very positive development, because we really need to see inflation fall next year to see a return to growth. And we've also seen consumers so far proving relatively resilient, as the large saving stockpiles they built up during COVID have insulated them to some extent from some of the pressures.